Hello, today I want us to jumpstart on our class on single entry, or what other people call it computer records. And this will be a little bit very interesting. It stems from our discussion in our previous classes. I remember when we were talking about the control accounts. If you remember in our previous discussion, we had something on control accounts, and we had them in two. We had a debtors control account and then we also had a creditors control account. So we were going to build on whatever it is that we learned on our control accounts as we solve problems on single entry or incomplete records. So what are these? Many small scale businesses who cannot afford, well, probably cannot employ an accountant, normally keep some records so that they can be informed of their businesses. You meet Mamboga in the market, she has a record of her purchases, her sales, a record of the income she has received, a record of the people that she has, probably the sales that she has made a day, the payment that she has already made, and even a record of the people that she has picked materials from or goods from in terms of debt that she has not paid. She will also have a list of people that owe her. If you move around, you'd see some mamambogas have some small exercise books where they keep in John, somebody has a debt of 60 bob today. Tomorrow they come in, pick and add some tomatoes of 100 bob. They add it over there. Tomorrow when they come in, pay, they subtract. So they are keeping in rudimentary. And the most common form of this incomplete record is the single entry system, which consists primarily of maintaining only a cash book and, of course, as I was mentioning, a file of debtors and creditors and paid invoices. And when such kind of transactions are done, you cannot be able to file them for even tax purposes because they cannot be able to move in to pick what we have learned as one of the tenets of accounting, the double entry concept. So our duty then is to review these particular single entries and try develop financial statements from them which can be able to stand the test of time and which can be submitted for tax purposes or for purposes of either when they want to get a loan or when they want to access some other services, things which can again still be presented at the end of the day. So what do we then get from these single entries? Normally you will find that these traders have what we call like a cash book. They have a cash book which is summarized and has two sides the way we have learned. And the first side, on the debit side, normally has whatever it is that people who now maintain is the cash or bank balance brought forward. That means on this other side, we'll also have our cash. Let me try check. I don't know why my pen is misbehaving. Aha. Let me check up on this. Sorry for that little issue. Let me check it out. I think there was something that started amiss, so let me just pick it up again. That's okay. So what I was looking at this, so when we have our cash and our figures brought forward there, then we have definitely our cash in hand or our cash at bank, carried down or brought down. The figures are there. Then once that has been done, of course, we have that particular cash on that other side. If there was a bank overdraft, if that is what the starting point is, so our bank OD, our bank overdraft brought forward will be on the credit side of that particular cash book. And then, of course, our bank OD will be down here, brought down, will be on this other debit side of our particular cash book. So as we had learned in our previous issue, as it was, is that anything that increases the cash book is debited, and anything that decreases the cash book is credited. So some of the things that we'll get in here as debit entries in this particular cash book are when we have receipts from debtors. So when we have all the receipts from debtors will be on that other particular side. That means when we also now make payments to creditors, it will be credited. These receipts will be debited. The other thing that will be there are like cash sales. If we now sell things in cash sales. And then the other thing is when we now have even sale of fixed assets. So you'll also have all of them there. Sale of fixed assets there. And then we have other income, if there are any. So probably income from rent, income from other loans or some other things. We can even have additional capital. If there's additional capital that has been introduced by the owner, they'll always be there. Then on this other end, on other things, apart from the payments to trade creditors, there could be, okay, of course, this one I say to creditors, but there could either be cash payments, not necessarily to creditors per se, but to other people that we are paying. Just a minute.